Welcome back to Liquid Lunch, everybody. Today is December 14th, 2023. And so we're happy to have you guys back. We're back here and we're excited to kind of recap what happened in 2023 and maybe discuss, what's going to happen in 2024. And so again, guys, we are powered by CryptoQuant, right? The leader in data and intelligence platform that is helping adopt crypto worldwide. Okay, we're not just in it for the money and for the stuff. We're in it to help adopt crypto worldwide. And we want to make sure that everybody can empower themselves with this new technology. And so we're excited again today to have our CEO, Ki Young, join us, and our head of research, Julio Moreno. Look, a lot of exciting things have happened in 2023. But before we get to that, before we start going to some of the slides, any comments on what's happening lately, guys? There's a lot of stuff happening lately, like with, bills in the United States to ban self-custody and, some other things with some banking institutions overseas. And so what do you guys think? It really looks like this banking war is kind of heating up to some degree.
Yeah, and I mean, what I saw yesterday was the Fed, and we have a slide for that, and so we will see their comments on what they expect for interest rates and inflation. I think the market took it like a little bit like bullish, right? After that, so yeah, and about the bill, you're talking about the Elizabeth Warren, right? Bill.
Elizabeth Warren, yeah.
Yeah. So I've seen, does she have making those types of bills before, right? Do they pass or?
Yeah, she's got a pretty bad record in passing bills. So it was kind of funny though how like the night before it happened, we had that big dump, and then like the next day that bill came out. So it almost seems like somebody knew about that ahead of time. I don't know, but you're right? The dovish reaction to the Federal Reserve, they kept interest rates the same. And so, that was a big boom for not only the markets, but, for Bitcoin as well. And so we saw a big rebound. And so I'm kind of getting these vibes of like 2017, kind of these vibes of right before, it went kind of crazy right into January. So yeah, we'll see how that plays out. We're going to give you guys some alpha, right? We're going to give you guys kind of like what happened in 2023, right? And so that's why we want to recap. Like this is going to be our last show of the year. And we want to kind of just do a recap of what has happened with on-chain, what has happened with Bitcoin and some of the ecosystem. And so, Julio, did you want to go ahead and pull up your presentation?
Yes, let me share the slides. Yeah, so yeah, we'll start with the 2023 retrospective, the most important events that happened and how that played out in the markets. And so first, the one thing that is really important to see Bitcoin, the dominance of Bitcoin in to crypto, right? This year, I mean, it was a year where Bitcoin outperformed, the overall crypto market. Not all the coins, but in general, right? The crypto market. And so you can see it's especially important to see that the reaction after some events, right? And so you can see that like the chart here in March, we had the Silicon Valley Bank situation, right? And so after we cleared that out and how, Bitcoin dominance increased really, really fast, right? So people talking about like, okay, Bitcoin is like the safe haven of crypto, right? And so with these banks failing and so after we cleared that out, like we saw like a rally in Bitcoin outperforming the general market, crypto market, right? And then there's, I think that also, the regulatory, clarity with other coins, right? After the SEC sued Binance, sued Coinbase, and they
put a lot of the altcoins on that list, right? Of
exactly,
being
yes, exactly,
securities.
as being securities, exactly. They name it securities, a lot of altcoins, and you see that again, Bitcoin rallying and outperforming those coins, right? And so that's why I think like Bitcoin seen as a safe haven in crypto, and then the other regulatory clarity of Bitcoin over other type of coins that could be like securities also give Bitcoin that that outperforming in the market, right? And so other and we also see like after the XRP court ruling, Bitcoin dominance coming a little bit down because XRP rallied a lot in one day, like I don't know, like 70% or more.
Yeah, it's funny watching the rugs go back and forth.
Exactly. And Yeah, and then after that, like Bitcoin continued to outperform, right? After the Binance and DOG ruling, also Bitcoin outperformed, and then this little bit of decrease in Bitcoin dominance is, I think, it's mostly related to Solana rallying, right? Solana has rallied a lot in the last month, so that's why you see this decrease in Bitcoin dominance. And by the way, this Bitcoin dominance metric that we calculate is a little bit different from dominance calculations out there, because we exclude like the coins that have very little liquidity. So we exclude those coins. It's
Yeah,
just
so do you
coins
want
that
to
have like a
describe it, do you want to describe exactly what this means, right? Does this mean like the total invested dollars as part of percentage of the market? Is that what we're looking at?
yeah, the market capitalization of Bitcoin as a percentage of the total crypto capitalization. And so if you see that increasing, it means like Bitcoin is outperforming the overall crypto market.
Now, the funny thing about this really doesn't take hash rate into consideration, because if you look at the hash rate of each coin out there, right, Bitcoin's probably at like more of like a 95% dominance. So it's funny
Yeah.
watching the chart, the difference in the dominance per the dollar, right, per the value versus the energy behind each
Mhm.
coin. So it's interesting to see the divergence there.
Yes, yes, exactly. And yeah, this is based on just the market capitalization of each coin. So that's one of the things that really, I think, was important in the year, like Bitcoin really dominating the overall crypto market in
So
this
do we think we're
in
going to
this
get
context.
So do we think we're going to get an alt season, right? Usually when Bitcoin kind of moons like that, it kind of wavers and then it like
Mhm.
takes a dive while alt season kind of takes off. What do you think? You think we're going to have an alt season this 2024?
So we had a little bit of an all season in the last month, but yeah, that's right. What you say, like when we get to the later stages of the bull market, the altcoins outperform, right? And so you could expect that. But for the next year, and we will see like in the next slides, like the outlook, right? I think with the ETF coming, I mean, it could be different this time, because Bitcoin has like more, I would say, exposure to like the institutional side this time, right? And so that could change. But yeah, typically in the later stage of the bull cycle, the altcoins tend to outperform.
And so what else is interesting is the amount of Bitcoin on the exchanges as well. And so I believe, right, we're going into this next cycle with a 6-year low of
Mhm.
supply on the exchanges. So that's going to be interesting to see what happens there.
Yes, and this next slide is related to why did Bitcoin outperform, and this is a metric that I like to follow. It's the open interest in perpetual futures market, but it's the relative open interest between Bitcoin and Ethereum, right? Which is this purple line here. And then the black line is the price, the relative price of Ethereum and Bitcoin, right? And so you can see that it's a downward trend for price, but it is correlated with the downward trend of open interest, the relative open interest. So meaning that traders or investors are getting more exposure to Bitcoin relative to Ethereum in the futures market. So you can see that as an explanation of, okay, why did Bitcoin outperform? Well, traders and investors, they got more exposure, more demand for Bitcoin relative to Ethereum. So there was more activity on Bitcoin in the perpetual futures market. So that's why you see this outperforming through the year. So this is the entire 2023 of these metrics.
Now
And
this just isn't Michael Saylor buying Bitcoin, right? This is the total total
yes,
market of investors buying Bitcoin. And so, guys, real quick, all of these wonderful charts are provided by CryptoQuant. So if you guys do not have an account with CryptoQuant.com, feel free to go check it out. We've got some great on-chain data analytics that is real time, and if you want access to that, check out our website, contact us. We'd be happy to set you up with trials or anything like that. And so we have API access and all these different options for you to get started. So these charts are wonderful because it's showing the sentiment, right? You're seeing Bitcoin dominance go up.
exactly.
You're seeing Ethereum, kind of open interest go down. But really,
Mhm.
we don't have any SEC clarity. Like really, that's kind of, I think, holding everything just in this limbo where nobody really knows what's going on. And so will that finally get, finalized with an ETF? Maybe not, right? Maybe they're just going to continue with enforcement and really not give any clarity, which is a weird way to operate, I'd say.
Yeah, and so for the alt season that you mentioned, you could follow like this open interest ratio, because if it shifts, right, and so then there's an indication there, like, okay, maybe like investors or traders are now getting more exposure to in this case Ethereum, but to in general to other coins, right? And so that's the shift in that trend for this indicator could signal that, right? That's why I like to follow that. Yeah, and so next is stable coins. The landscape of stable coins through the year shifted a lot. We have some stable coins that really were the winners this year in terms of market capitalization. We're talking in terms of the total supply that there's for stable coins, and then there's others that are losers in terms of market capitalization, right? And so this chart, we're seeing that evolution of market capitalization in stable coins. If you see your Tether, which it's now the market cap of Tether is at record highs, above 90 billion now, and it gained 24 billion during the year. And so
they took a lot of market cap from Circle, it looks like.
Exactly, yes. And it's interesting to notice that Circle's USDC market cap started to decline after the Silicon Valley Bank situation, because they were exposed to that, right? So yeah, that's what happened. And then there's the other coin that really lost more of market cap was the BUSD, which was the Binance stable coin. Of course, with all the regulatory pressure that Binance experienced this year. So you see that after there was an event like the regulatory authorities in New York that prevented more issuing of BUSD, right, since February, and then you see like the decline after that. Yeah. So yeah, BUSD also lost a lot of the market share there.
And what's interesting is Tether, right? Tether is backing a lot of their treasury with real Bitcoin, as opposed to these other stable coins that are not doing that. So it's going to be interesting to see. And Tether is really kind of is going nuts.
Yes.
The El Salvador bond is set to go live in the first quarter of 2024 on Bitfinex, right? So it's going to be a Tether related security offering that's, I believe, going to be accessed through some kind of a stable coin like Tether.
Yeah, and also they have like a lot of US treasuries, right? Also backing that.
A ton of US treasuries. Good point.
Yes.
They're almost like the new central bank almost. It's funny how they're kind of holding everything together there at Tether.
Yeah, I think they become like, one of the largest holders, of reserves, US dollar reserves, larger than some central banks for some countries. They are now bigger than that. So yeah, in terms of stable coin landscape, that's what happened this year. Like Tether being the big winner, and then of course the stable coin that lost the most, like BUSD, because of all the regulatory pressure on Binance. That's mostly what happened with the biggest stable coins. But we also saw like some emerging stable coins. So in here we're seeing the stable coin that PayPal launched. And this one was launched like in August, and it has already $171 million of supply of capitalization. And so most of this is in exchange, in crypto.com exchange. So they have a partnership with crypto.com. And so we've seen like a really growing PayPal stablecoin, and you can like track if you're interested in like PayPal, if you're exposed to PayPal, and you can track like how are they doing in terms of their stablecoin, right? Which is like a new product for PayPal, and you can be tracking like the circulating supply, the holders, all that. We have it in dashboards. So yeah, that's one of the emerging stable coins this year. And then the other one is FDUSD, First Digital USD, which I think it's linked to Binance. And so we're also seeing that Binance, after BUSD started to decline, then they looked for other stablecoins, right, for their trading activities in the exchange. They also look to TUSD, and then they also are using in the exchange the FDUSD, which since July has grown by 1 billion, more than $1 billion in market cap.
Yeah, and stable coins are a very important part of this ecosystem, because people aren't yet into Bitcoin, right? They're not yet into these other cryptos, but in countries around the world, like, inflation is deteriorating their purchasing power, and they want access to dollars, right? These people need access to dollars. And so it's great that they can get into like a Tether or, something that remains consistent with the dollar, because, Argentina, I think they lost what, 54% of their peso was devalued overnight. And so you think about that, like that's a problem for a lot of people in other countries. And if they're not into Bitcoin yet, they can at least get access to dollars until they, take the orange pill or go down the crypto rabbit hole to figure out how to preserve their wealth. So stable coins are a very important part of this market, and we will continue to monitor that.
Yes, exactly. And they're also really important for providing like liquidity, right, into markets. So when you see like the market capitalization of stable coins in general go up, it means like more liquidity is, entering the market. And that's also a signal of the liquidity of, people may want to, you get to your stable coins and then purchase some cryptocurrency, right? Purchasing Bitcoin. So people have access through stable coins, and it's important as a liquidity indicator. So that's why it's important that we're seeing like Tether going to record highs in market capitalization. So that means more liquidity, right? And then the same for like just these new stable coins.
All right, yeah, let's move on to the next one and talking about Bitcoin network activity. Now, this is a hot topic, especially with a lot of the Bitcoin maxis out there, because some of the stuff they don't like that's happening on chain. But yeah, let's go into this chart.
Yeah, this is our network activity index. So it's an index that tracks several metrics network of the Bitcoin network, like active addresses, like the number of transactions, the size of the blocks. And so it tracks all that, and then it provides like a summary of what's happening on the network. And yeah, as you say, like in 2023 was, crazy for network activity. And we'll see like most of this is because there's a lot of transactions activity because of inscriptions, because of BRC20 tokens, which are like a new way to use the Bitcoin network, right, for other type of transactions. And so yeah, we've seen network activity in this year going to record highs in for the Bitcoin network, right? And so you can see that clearly. It also is, you can see historically it's correlated to prices and overall like sentiment, right? We have like the Chinese ban of mining, right? And you see like how network activity decreased. Or here after the top in 2017, and all the bear market was like network activity was really down, and then starts to pick up again when we enter the next cycle, right? So it's interesting to see that over the 2022 bear market, network activity was really flat, and then after 2023, when we got to the bottom, it coincides also with higher network activity. So yeah, this is something that is new, right, for Bitcoin, like having inscriptions, having like NFTs on chain, and then also people issuing tokens, but directly on chain, in the layer one of Bitcoin. So that's what caused this really increase in network activity. You can see it here. So this is transactions, right? Yeah, I mean active addresses in the network, but the purple line is the address type that is used for inscriptions, for BRC20 tokens, which is called like the taproot addresses.
Right.
So you can see how, since the beginning of 2023, it starts to increase, and so there's a lot of more use of this type of addresses to store, text, to store images, even video. directly in the Bitcoin
Yeah, it's
blockchain.
funny because this is a very contentious topic with a lot of Bitcoiners because they believe it's, spamming the network.
Mhm.
And so, what does that mean? Well, it means like, hey, like, Bitcoin is this open ecosystem. People are competing for block space. Now, if people want to fill it with JPEGs, right, that's up to them, but it's gonna cost them something. And so if you think
Yes.
about that, like if it is a spam attack in some sense of that, like they can only do it for so long. And so it's going to get very costly after a while to continue to do this for them. And is there a benefit to this? Well, some say they're kind of reinventing the wheel. So it's interesting to see this continue because the cost of transactions right now are still pretty high, right? There's still a lot of this happening on the network right now.
Yeah. And what do you think, Key, about the use of the blockchain, or the Bitcoin blockchain? This use.
Yeah, I don't really necessarily think it's a good use of block space. I think it's kind of I do think it's kind of a spam attack on the network. Like, some of these guys are kind of wash trading these inscriptions that it costs $10 and they're selling them for 500K, and so I don't really see the point in some of that. I think a lot of the token stuff can be done on second layers with Bitcoin. There's great options like Counterparty and some other ones like Stacks and some other things that you don't have to do everything on chain, right? Like on chain should be reserved for, the main layer stuff. But look, people are free to do what they want to do, right? Who am I to say what people can and can't do? Let the market decide eventually what direction this should go. But that's my opinion. Key, how about
What's the
you?
opinion,
What do
Key?
you think?
Yeah.
I think eventually we'll see some kind of smart contracts and Web3 applications on Bitcoin. I think I'm a Bitcoin maxi, so I guess this is good, like kind of early stage for the adoption, just like Ethereum. For Ethereum, their NFTs on Ethereum, there were a lot of wash trades and bots. Some these are bubbles, right? But these type of things happens across all the blockchains, so I think it's gonna be fine.
Yeah, and I mean at the same time, it's feeding the miners. So in essence, like it's making the miners a lot stronger because they are loving this. They are making a ton of sats off of putting these JPEGs on onto the main layer.
And
so,
actually, we will see like the fees. What's has happened to
okay,
fees?
is that coming? Yeah.
Because we wanted to put this as a example of for people to visualize, like, okay, what's an inscription, right? So basically, you're storing like text on the blockchain, right? But it's encoded, and when you decode it, it forms like a picture, right? So this is one of the collections. Yeah, talking about fees, right? What's the result, or the result of these inscriptions on the network, and one of those is higher fees, right? We have seen these fees increasing, and so here you have in the purple line the taproot addresses that we saw in the previous chart, but overlay with the fees, with the total fees of that paid to miners. And so you can see, like, when there's like a spike in the use of this of this type of addresses that are used mostly for that, for inscriptions and that, you can see like the pressure on fees, right? And so I mean, yeah, from the miner perspective, and especially with the halving coming next year, it's good for miners, right? So they need
Great
to
for miners.
pay their operations, right? And so that's one of the things that it's positive in terms of fees for miners, right?
Yeah, and so even if this is right a quasi spam attack, like they're only making the network stronger, So either way, it's a win for Bitcoin, right? In my view, right? If you like it or you don't like it, either way, it's a win. Like Bitcoin gets stronger, the network gets more robust, more miners are hashing Bitcoin. And overall, that's a net positive. So, hey, hats off to the inscriptions guys. We appreciate you guys building our network. I mean, in essence. Well, we also have cool new options like Ocean, right? So Ocean is this new mining pool that technically is filtering some of the stuff out. And so, if this is an open market, like we like to call it, there's going to be mining pools that will say, hey, we don't want to put these in our block templates, right? They're not going to allow these transactions in their in their templates. And so it's going to be interesting to see if that continues in that direction.
Yes, and that's exactly what you say is key. Like, I mean, you can choose, right? You can choose. If you don't like inscriptions, then you could mine with Ocean in this case, or it's a free market, and they're they're paying their fees also. So it's a free market. And one of the other effects, that you could see, this is some of the new data that we are putting in a platform. It's mempool metrics.
So guys, this is awesome.
Is,
this is awesome. So real quick, sorry to interrupt, Julio.
Yep.
Again, CryptoQuant is putting a big push into Bitcoin only ecosystem type data. Okay, so we are going to be implementing mempool data, lightning data, more on-chain data, right, to provide more alpha in this ecosystem. And so the mempool stuff is very important, right? You were able to see the fee ranges and you can see here how it's spiked. But no, CryptoQuant.com, guys, again, we're putting a big push into Bitcoin only in some sense of that ecosystem so that you guys can get all the analytics and the data you need for specifically Bitcoin, if that's what you're into.
Yeah. And so just for people that don't know, like, what's the mempool? So when you send a transaction, it doesn't go directly to a block. It goes first, it is stored in the mempool. So it's stored there, and then it waits to be mined, right? To be chosen by a miner, put it in a block, and then processed, right, as a transaction. And so if too many transactions come to the mempool, right, really fast, then the mempool fills, and that's and with the inscriptions and the BRC20 tokens, we've seen that the mempool getting bigger with more transactions waiting to be mined, right? And so when we see that here is the number of transactions in the mempool at each time, at each day, right? And the color bands is the fees that those transactions will be paying, right? And so you see, like, the lower is higher fees being paid by the transactions, right? So we have a lot of transactions, and then some transactions really paying a lot to be mined. And so that's also the other effect of inscriptions is it's not just, okay, for one is more network activity, right? But the other is that the mempool gets a little bit full, and then you will have to wait more time for your transaction to be mined, or if you want to get your transaction mined faster, then you will have to pay a higher fee, right?
You're competing for block space. So if you want your transaction to go through quicker, you need to pay a higher fee in these certain scenarios. And so it was interesting because I was just at the Unconfiscatable conference in Las Vegas last week, and they talked a lot about how the block space is going to be really kind of this rare thing. There's only going to be a certain amount of transactions that can happen per year. And so with the halving coming up, it's going to be interesting to see how block space, how that transpires as we move forward in this.
And so
all right,
now
2024
yes,
is this our year, Julio? Is this the year?
Are we gonna
get the God candle? Is the God candle coming, Julio? That's what everybody wants to know. Are we going to the moon?
Exactly. Yeah, I don't know, but it's really paints like a good year, right? Because of all the events that are happening. So yeah, it looks like that. So
what do you think?
See.
Are we getting the God candle this year? Next year?
I think it's the year for the financial institutions. So I guess finally we'll get approved from the spot ETF approval. So
Body temp approval. Yeah, 2024 looks really, really good, you guys. We are coming into a very unique, pivotal moment in Bitcoin's history. Again, this is not financial advice, but every indicator, right, from our perspective, looks very, very bullish, even without the ETF approval. But we probably know that's coming at some point. And so, yeah, let's get into it, Julio.
Yeah, we'll start with our indicator, a P&L index indicator. And so this one tells you where we are in the cycle, right? And which type part of the cycle we are. So you can see here, like when this indicator goes above, it's the purple area, and then the line is the indicator 1 year moving average, and when it goes above the moving average is when the cycle shifts, right? So we had the bear market 2022, and then at the end of 2022 we started to see like this shifting, and the indicator saying, hey, maybe we're starting a bull market, right? And actually after we see this one, we actually published that like, hey, back in January.
Yeah, you
early
did.
in January.
You published this. You called it, Julio.
Yes, I mean, yeah, the indicator called it, right?
Yeah.
So
right,
I'm just following it. And so, yeah, exactly. So, and I read and hear the people saying like, oh, we are finally in the bull market as we approach 40,000. And I was thinking like, we're in the bull market since January, right? So it doesn't mean that we are in this like really fast price appreciation phase, like the one you see at the last part of the cycle, right? But it means that we shift in late 2022 to the bull market, right? So you can say that like we're still in the bull market. The indicator is still far from being like when it goes to this red area, it means like, oh, prices are near the top, right? And so yeah, in general, the idea is that we are entering 2024 well inside a bull market, right? So that's what I want to point out here is how are we entering 2024 is well inside a bull market, right? Even if could be like price corrections, which happens in every bull market, it's important to notice that, like, okay, where we are in the cycle as we enter 2020, 2024, it's
absolutely.
in a bull market.
This is a great signal pattern to keep an eye on. So awesome chart, Julio.
Yeah, and also, for for clients that are trading institutionally, knowing, for their trading strategies, knowing in which regime we are in the cycle, right? Or which part of the cycle we are is really important. They have their own strategies, right? But filtering for this type of indicators that where we are in bear, bull, and where within the cycle is really important. So that's really important to follow and to monitor. So that's for the P&L index, which tracks that. And then this is a more short-term indicator, and it's showing just 2023, right? And as we are in a bull market, there will be corrections, right? And you can see when this indicator flags, possible corrections, it turns like red. We are in a bull market, but maybe we are overheating a little bit, right? So that's when it flags red. And so it has, flagged, let's say 3 times during this year. And as we went about 40K for Bitcoin, it flagged it right again. So another good indicator to follow, even if we are like in a bull, right? During the bull, there's some corrections that will happen, and so that this one is more sign to flag that, to alert about that. So yeah, just to give some context for a shorter term analysis with this one. And then yeah, everyone wants to know like prices, right? Targets. And so this one is one that I like to follow, and it is basically these bands tell you like what's the price target depending on the network activity. That's what it is. It is taking into account network activity and give you a forecast, a target, right? And so there's different bands for this one. And so
yeah, this is an important one. Let's just like give a little explanation here. So if you guys understand Metcalfe's law, right? This is kind of the
yes.
Metcalfe price evaluation model. So just like understanding the definition, right? Metcalfe's law states that the financial value or influence of a telecommunications network is proportional to the square of the number of connected users in the system. Okay, so basically it's saying that like the network effects of Bitcoin start to exponentially get more more important, more powerful as more users get connected into this network. And so it's a really interesting valuation model, and I do like this a lot, actually.
Yes, and exactly. And as you can see, like this band here, this red line, it was really important, signaling the tops, right, in the last bull cycle. And now this band is at 53,000, right? So we are approaching it. So that will be like I would say like short, medium term target. And then this is a really important level in terms of, okay, are we gonna go over that? Because in the last cycle we topped there, right? And so it's interesting that we started the bull cycle in at the beginning of 2023, and we are already at really near that band, right? And so the question is, are we going above that? And then what would be next? And next will be like this other band, which is at 160K. It should be 160K. So that's like let's say the long term target for this cycle, taking into account this indicator, just to give some perspective, right, of what to expect. And actually, I've seen like some other forecasts, and they also like forecast between that area, like 150, 160 for the peak. So just to give a perspective, right, of what we can expect.
Yeah, and this is a unique position to where Bitcoin may actually hit an all-time high before the halving. There's been a few people that have said, hey, we may be going into this and hitting an all-time high before the halving. So yeah, let's continue.
And then we have this, about the ETF effect, right? We published actually a report on that, on the ETF effect. And basically what I want to say here, I mean, is that for every new dollar that enters the market, then there's a multiplier effect for the market cap of Bitcoin, right? And that multiplier effect can be between 3 and 6 in a bull market. And so there's some estimates that say, okay, how much can we expect from these ETFs to how much money can we expect from these ETFs to enter the market? So it's around, let's say, 150 billion, right? Not instantaneously, right? Not right away, but over the next, let's say, year. And so that will have like a multiplier effect in the market cap. And in this research that we published, I think it was like 2 months ago, almost in October. We think that the effect could be between half and 1 trillion from this new money coming into the market for the market cap of Bitcoin, right? So that's the important to have in mind, is that if these ETFs get approved, okay, and then how much money is coming and what's the effect on the market cap of Bitcoin. And so there's a multiplier effect of that. And we estimated between that.
Yeah, there's, the amount of Bitcoin on exchanges is at an all-time low, right? And so there's only so much Bitcoin out there for institutions to buy up. But, this is an international game, guys. This is not just about US institutions. There are other, governments and banking institutions that are all vying for this very scarce asset of Bitcoin. And, so there's talk of Qatar buying, 500 billion worth of Bitcoin, which is, basically more than half of the current market cap. And so if you start realizing this on a global scale, the ETF is probably going to be dwarfed by other nation states, I think, at some point.
Yeah. So, and this is about the, the possible multiplier effect of ETFs. Then we have the halving, of course, next year. And here we chart the, how price have the returns of price after the halving. So here at point 0, it's the halving in each cycle, right? So this line is what price did after the first halving. Then this black line is what price, how price moved after the second halving, right? And then the purple is the last halving that we had in 2020, and how price moved. And so it is a good,
So the
indication
halving,
of what price can do after that, right?
the current Bitcoin price, the halving is not priced in, right? People have no idea what really is going to happen, but the halving price, the scarcity, right, from 900 Bitcoin a day to 450 Bitcoin per day is a huge, huge event that has not been priced into this cycle yet, I don't believe.
Yeah, and this is just to, we want to show like what to expect, right, for 2024. And so, okay, it doesn't have to be like exactly as the last cycles, right? But you see like a clear pattern of what happens after the halving, right? And so between 1.5 years, we see like the bull run after the halving. That's what has happened in the past, and you can see there and make your own target price forecast with this in mind, right? With the halving effect. And so this is some of the important thing that will happen next year around April.
Key, any comments on the halving?
I think the important thing is which miners are gonna, capitulating for the next few months after the halving.
Point.
Yeah, because I think I saw Marapool their investor relation presentation, and they said the most recent mining cost per coin is around 18K, which means after the halving it's gonna get doubled, right? So it's gonna be 33K. So it was when I saw that Bitcoin price was around 35K, so I punt a long position. And we're still like 42K, right? And the mining cost is gonna be 36K. So I guess a lot of Bitcoin hash rate comes from Founder USA and Mara Digital, Cipher Mining, all these US-based mining companies, and they're backed by big financial institutions. So I guess for them it's really important to protect the level like 36K level, right? And they're not gonna sell, I guess, just 10%, 20% of profit. So I think we're still bullish in terms of they're on the moment when they sell all the Bitcoins from miners.
Yeah, that's an excellent point, right? Because we have to make sure the miners are cash flow positive, that they're making money, right? Or they're going to go out of business. So again, incentivizing cheap energy production like the volcano energy in El Salvador, it's basically mining for free. But again, some of these other miners in the US are doing, geothermal stuff, they're flare capping the gas. And so all these other eco-friendly ways that can trap energy to mine Bitcoin are good for the ecosystem, because we want to make it as inexpensive and eco-friendly as possible so that we're able to capture that energy and not waste it. All right, do we want to the macro effect?
Yeah, the macro is the last one, right?
The Fed pivot. Has the Fed finally pivoted?
Well, it seems that, I mean, they yesterday they say that like they believe like is at or near its peak, right? And so for the next year, they expect interest rates to be 4.6% at the end of 2024, and we are right now at 5.25, 5.5. So they expecting like lower interest rates next year. And so and this is also because the inflation has been coming down. CPI was 3% basically in November, and this is the lowest in March 2021. So this is the other, like the macro effect in terms of monetary policy from the Fed. And also, it's basically expecting lower interest rates next year.
I mean, inflation's going to have to go up then. They're going to have to move their 2% inflation target to what, 3-4%?
They actually, they didn't move it, but there was some announcement about we will start, decreasing interest rates even if we are not at the 2% inflation, right? That's what they announced it like yesterday, and so I think that the market interpreted that as bullish, right? So we'll see. It seems like it has peaked. Yeah,
I mean, 2024 looks amazing. It seems like everything is lining up with the halving, the hash rate, the dominance, And just everything is good. We got the volcano bond coming, institutions are coming, and they're going to have to pivot, and they're going to have to probably print more money, is what it seems like. This has been a great panel. You guys have done an excellent job with data that you guys prepared. And I'm really excited for 2024. I'm really excited with all the things CryptoQuant is doing in regards to data and analytics, right? We're creating all these new metrics for Bitcoin. We're putting in the meme pool data. We're putting in Lightning data. We've got some interesting things what we're going to do with miners as well. And so we'd love for all of you guys to be part of our team. Feel free to reach out to us on Twitter, on our Twitter account at CryptoQuant. There's an ecosystem built into our site where you can follow individual contributors like Julio to follow their charting and their alpha. And we will see you guys back in 2024. See ya.